Welcome back to Withum's video series, The Alternative Route. Here with me today is Kelsey Thomas, Senior Manager from Withum's Transaction Advisory Team. Kelsey, thanks for joining us today.
Thank you so much for having me, Colleen.
Okay, so today we're going to talk a little bit about the middle market private equity trends from the perspective of Q3 for 2024. So, which industries are you seeing the strongest valuations, and what factors do you think are driving that trend?
Sure. Thanks, Colleen. So what we're seeing right now are healthcare services have the highest multiples, followed by technology. But there's still some things you kind of need to consider when you're looking at those multiples, when you're comparing them to historical levels. So if you look at some of the tech multiples, they've actually declined to 8.2 times from the high in 2021. So even though it's one of the higher multiples that we're seeing right now, there's definitely some trends that we're seeing on the decline side. So what are some of the reasons for that? If you look at how tech has done historically, there's a lot of saturation with the types of companies that are out there now. And there's been some slower growth since the kind of peak pandemic rates that we were seeing there. So on the healthcare side, what's driving, the increase in the multiples? And what I would say there too is that they've been steadily increasing from 2020. Currently, through the year-to-date period, the multiples are actually matching what we saw in 2023. So we're looking at 8.9 times of EBITDA. So some of the things that we're seeing that we think are driving that, of course, the aging population as the boomers kind of make their way through the workforce, rising chronic disease rates, and increased adoption of innovative technologies. We're seeing an uptick in some of the telehealth and interest in that specific sector.
It's interesting. So, how do you think the changes in interest rates are influencing some of the competitive dynamics of deal financing in the middle market?
Yeah, that's a good question too. So one thing to keep in mind, especially when we're talking about the year-to-date Q3 results, is that during Q3, this was really the first federal rate cut. So we were bringing rates to, 4.75 to 5. And if you kind of think about now, we're down to 4.25 to 4.5. So, this is definitely having some impact on the middle market financing. And so the good news with this is, this has helped to expand economic activity. And there's been some ease labor market conditions, which has kind of helped, with the competitive dynamics in the middle market. However, I will say though that the inflationary pressure has still remained somewhat elevated throughout all of this. One school of thought to kind of correlate the interest rates and the dynamics is that with the drop in rates, we're going to see some fierce competition between lenders, and some of the private funds out there. So theoretically, that should boost M&A activity for lowering the overall borrowing costs and increasing those leverage ratios.
Right. So, based on the Q3 and the year-to-date 24 results, where do you think the 2024 transaction activity is going to end up compared to the prior year?
Sure. So if you look at Q3 kind of standalone, that's usually historically, and that's the truth with years past and the truth with 2023, is that's usually the lowest transaction activity. And that's, kind of think about just the summer slowdown. People have kids, there's less networking that happens during those times. It's just busy. So in this year too, there was also the impact of the election uncertainty that was kind of impacting some of that Q3 results. So even with that slowdown in Q3, the estimates are out there kind of saying that we expect the 2024 deal tally to still outpace that from 2023 levels. At this point, it's looking like maybe 15 to 20%. So that's good news for the middle market.
Yeah, that's exciting.
Yeah.
And what factors do you think are going to determine the long-term outlook for the middle market when it comes to deal making, whether it's going to strengthen or it may remain unclear?
Yeah, I mean, obviously, if I could tell you for sure, we'd all be a lot richer, right? But
You'd have a crystal ball.
exactly, yeah, those little magic 8 balls. So broadly, we're looking at the financing seller and market behavior. So of course, we talked a little bit about the financing side of things with the lower base rates and credit spreads. It's the commercial bankers that are looking to aggressively try to take back some of the market share. And again, kind of just talking through some of the leverage multiples and the competition that hopefully will will start to re-engage as the interest rates continue to kind of level off. So another couple of things that are going to impact this is if you kind of take a look at what the dry powder that's out there for PE, there's a lot out there that's looking for a home. There's a lot of LPs that need to be paid back. There's a lot of post-election optimism for a less restrictive regulatory environment. There's, just overall the anticipation of the uptick in M&A activity, the fact that there wasn't this gigantic recession that everybody was speaking of, so there's all these factors, but, there's also the uncertainties. There's the economic and the geopolitical and even environmental factors. I mean, obviously we're all thinking about our friends out in California. I mean, there's just so much to unpack there and so many different things that could impact it. Those are always going to potentially kind of throw a wrench in what we're seeing, with the deal market and the expectations for going forward. But, I think what everyone would agree upon is that there's kind of been the stage is set really for some improvement, broad recovery, somewhat elusive, but I think that the stage is set. So, for all of us, I hope that that's the case.
Here's hoping for a busy 2025.
Cheers to that.
So, well, thank you for joining us today, Kelsey. This is really valuable insight, and stay tuned for our next episode of The Alternative Route.